Hello traders and welcome to another video review. Today is Wednesday, February 8th, 2023. Let's find out what do we have today in the Forex calendar. As you can see, not too many very important data scheduled for release for today. Nevertheless, there is always something to keep an eye on. We got the data from the Japan published already in form of the current account and adjust current account. All of this data deeply disappointed the market participants. We have a speech from the Buba Balz at 9:30. This data from the Germany, and again Buba Balz will speak Q2, and then again Buba Vermeling will give a speech Q4. And in the meantime, we got the ECB Alderson speech at 10 o'clock. We got the FOMC Member Williams speech past 3. But the key event of today are Crude Oil Inventories scheduled for release 4:30. So all of you crude oil traders, this is very important data. And of course, at the end of the day, we got 10-year note auction from the US and Fed Weller speech at the quarter to 8 o'clock p.m. So plenty of speeches today. Just one event which is worth of noticing, crude oil inventories. Nevertheless, because of the speeches from the Germany and the ECB, and of course from the FOMC members, let's take a look at the euro dollar first. The euro dollar is moving down. Nevertheless, we got very nice engulfing pattern, as you can see, made after the market tested the level of 1.0669, which is the technical support. We got the engulfing pattern. Then of course we got this red candle on a 4-hour chart. Okay, since then market slowly wants to test the short-term trend line and break above it. Nevertheless, momentum still negative. 42 points only, but it's bouncing from the extremely oversold condition on a 4-hour chart. So maybe there will be bigger jump in the momentum if we break above the trend line. Price is still below the 100 and 150 moving average. So there is a cross of the moving average made just recently. 50-day moving average crossing from the upside to the 100-day moving average. This is usually bearish cross. Usually this is bearish cross, but please remember this is 4-hour chart. Okay, so pay attention to this as well. And we have, of course, the technical resistance. So where is our technical resistance? Let me just point out that the technical resistance is around here. The level is 1.0783. And this level must be violated in order for the market to test the moving averages and then eventually test the highs. It doesn't actually look like a big movement to the upside. More likely, the scenario is ABC to the downside. Let me just find out the correct wave. A, wave B somewhere. It will end somewhere here. And the wave C to the downside is still missing. So that's the situation on the euro dollar. So please make yourself familiar with this situation. And this is how it looks like right now. So please be careful trading euro dollar during the wave B to the upside, okay? Because it looks like we have the nice impulsive downside movement in the wave A, then the wave B to the upside, then the wave C. The simple corrective pattern is in progress. So let me just do the screenshot here, and we can continue to US dollar and Japanese yen, because we got this data from the Japan published yesterday, overnight. So what do we have here? 4-hour chart again, and this 4-hour chart looks a little bit different. So let's just zoom in. So what do we have here? Well, plenty of whipsaw trading. This pair doesn't know where it wants to go. This pair basically doesn't know where it wants to go. We got this technical resistance 132.90. We just retraced like a 50% of the last impulsive movement to the upside. Let me just take a look here and tell you the other way around. So we're going here and this one is going here. So what do we have? Yeah, 50% retracement. There you go. That's the level of the 50% of the retracement of the last wave to the upside, and it's 130.50. So that's exactly where we were sitting just recently on this level, and there is 50 periods moving average on this level as well. Right now we're trading just slightly above this level. Nevertheless, please notice the fact that we are still below the intraday technical resistance, which is at the level of 131.52. If we won't break above this level, market will likely go lower towards 61% of the Fibonacci retracement, and this level is around the 129.91. And this scenario is being played out just because what do we have here is of course the engulfing pattern. Nevertheless, this engulfing pattern is in the wrong place, so this is just a regular candle, so that don't trust the automatic labeling, candle labeling that much. We got short-term trend line, of course, from the top, not a problem. We got this, and it looks like the market respects this trend line for now. So as long as we are below the blue line, below the orange line, the outlook remains bearish, and the weak momentum confirms the bearish outlook for the euro, for the of course US dollar to the Japanese yen. We are doing the screenshot, and that's it. What's next in our books? Of course, it's a crude oil, because it's a crude oil day. So let's take a look what is going on here. The crude oil is trying to bounce. The crude oil is trying to bounce ahead of the crude oil inventories, and we are moving up. We are moving after the, as you can see, you have plenty of the engulfing patterns. Of course, they are fine. Nevertheless, they are in kind of wrong places here, but it also means that the bullish pressure on the oil is still strong. Support 72.25, and the nearest technical resistance, let me just take a look here, is 77.99, which is just above the 50 periods moving average. Right, so that's the first target for bulls. The other target for bulls is the next swing high, located around 79.71. So that's the other target for the bulls and technical resistance. And the last one is located at 82.47. So as far as you can see, what do we have here during this recent movement to the upside? Let me just find the measurement price range. There you go, price range. So if we consider this movement here to that top, okay, this is 573%, right? If we consider this movement here, it's lower, so it's 3.80. okay. If we take into the account another, for example, this one, this bounce, okay, that's even lower, 4.13. okay, so that's not that bad actually, but it's still not big enough. This jump here, it doesn't even look like a bounce. Nevertheless, 4% was made, and this recent bounce is way bigger. This recent bounce is 7.42. okay, so that's the biggest movement to the upside from the low of the 19th of the January. Okay, so it means that this is a directional move. This is directional movement to the upside, and it looks like if we break above one of these levels here, technical resistance, then of course the daily time frame might start look very nice, might start look bullish, more bullish than it is right now. Of course, what we have to do here as a bulls is to break above the key technical resistance, key mid-term technical resistance, which is located at 82.62, and it is that level. I will make it right. So that's the level it needs to be violated for the reversal to be confirmed and the downtrend to be temporarily terminated. Okay, so the further levels for the crude oil will be placed accordingly to the market price action. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.